Investors are making insane money yield farming their crypto. I invested $15,000 of my own money into 5 different farms on PancakeSwap. In this video, I'm going to show you exactly how to yield farm, how this can easily earn the average investor between $5 and $100 per day, and how much money I actually made doing this for 1 week. Before you can touch PancakeSwap, you need to set up a crypto wallet that supports the Binance Smart Chain. Luckily for us, the crypto wallet that most of us are familiar with, MetaMask, is perfect for this, so we'll be using that today. You just have to Google MetaMask extension, install it, choose a password, and do not lose your seed phrase. Please don't. If someone else gets a hold of that, you could lose all of your money, so keep that in a very, very safe place. Now that your wallet is set up, you need to buy some usable tokens for PancakeSwap. Any BEP20 token will work. BUSD and BNB are both great options. So once you buy BUSD or BNB on the exchange of your choice, send those tokens to your MetaMask wallet and you'll be ready to go. I'm buying and sending BNB from KuCoin, which I will have linked below if you want to use them for some discounted trading fees. Now you just need to connect MetaMask to PancakeSwap. Go to pancakeswap.finance, click Connect Wallet in the top right, pick MetaMask, click Connect. And then depending on what network you're already on, it will ask you to switch to Binance's network. So you can just click Switch Network if you see it, and then you're all set. Your wallet is connected. Now from here, you'll just want to click the link for Patreon in the description of this video if you want even more money-making content, buy alerts, daily signals, and a whole lot more. There's a reason we have more than 10,000 satisfied members. How is that for a smooth pitch? Anyways, before we go in deep, what is PancakeSwap? PancakeSwap is an automated market maker, or AMM, that allows 2 tokens to be exchanged on the Binance Smart Chain. The liquidity on PancakeSwap allows users to exchange their crypto, and that liquidity is provided by users as well, and that's how you actually make money. This is exactly what I'm going to show you how to do today, providing liquidity for trading pairs for others to trade, aka yield farming, aka passive income for you. The way that you make money is through a combination of transaction fees and platform tokens. More on that in a minute. So let's go ahead and jump into all the different features available on this site. Starting out with the trading page, we have exchange and we have liquidity. With exchange, this is where you exchange one crypto for another, simply swapping cryptos similar to a spot trade. And then we have liquidity. This is where you'll see your current LP tokens. You can think of an LP token as a receipt. You deposit your cryptos into a pool and you receive an LP token showing the assets that you deposited. For this video, I provided liquidity to 5 different pools, so I received 5 different LP token types. But how do you actually make money from this? Great question. Let me present you the earn page. Here we have farms and we have pools. Farming is a method of passive income with crypto where you supply a 1-to-1 ratio of 2 cryptocurrencies as liquidity for a trading pair. Don't worry, you'll understand all of this. And in exchange for doing so, you'll receive those LP tokens, your receipt for providing those cryptos. I like to think of each farm as a small business. If a business has $100 in total assets and you provided 5 of those dollars, you are simply entitled to 5% of the profits for that business. What's also cool is that LP tokens, that receipt showing your ownership of this small business for providing your assets, the LP tokens entitle you to a few things. First, a portion of the fees generated by the trading pair, plus the tokens themselves are stakeable, so you can earn even more of that juicy passive income simply from having those tokens and staking them. So let's say you wanted to put $3,000 into a Cake BNB liquidity pool. You would need to go to Farms, find the pair that you're looking for, and then click Get Cake BNB LP. Then you would supply $1,500 worth of Cake and $1,500 worth of BNB. You can also do this through the liquidity screen that I showed you, but this way you don't have to select the specific coins. Here, in exchange for the $3,000, you would get the LP token receipt for what you supplied to the pool. Then those LP tokens will show up in the liquidity section. You can then take those LP tokens and stake them in their corresponding farm by clicking on the pair that you provided liquidity for, enabling the farm, which can take a second. Then you click Stake LP, click Max for the amount, and then click Confirm on both PancakeSwap and MetaMask once it prompts you. It's also worth noting that the APR shown on each farm is a combination of the transaction fees earned and the LP rewards. And then you can even take that cake that you receive in rewards from staking and stake it again for even more cake. This is done on the next page, pools. It's like this machine of earning passive income from every end. And I know this might seem like a lot, but just hang in there with me and I promise you'll get it. I think the fact that these things aren't very user-friendly gives us more opportunity to earn even more money because most people aren't going to figure this all out, but here you are. Now, it's also important that you understand the risks of farming. First, of course, the cryptos that you're providing can decrease in value or increase. That's no different than buying any crypto, but you need to be aware that within a farm that can also happen. But we also have impermanent loss. If you're into economics, you can think of this as kind of opportunity cost. Impermanent loss is what happens when the price of one crypto that you provided liquidity for changes relative to the other more dramatically. So let's say you supply $500 of cake and $500 of BNB into a liquidity pool, and then BNB's price skyrockets, but Cake's doesn't. What happens here is you actually end up earning less than if you would have just held BNB outright outside of a pool. This is because the liquidity pool will constantly rebalance your holdings, so it's always 50-50 for each asset, 50%, 50%. You're not exactly losing money, but you're losing the opportunity to make more money. I like to think of it as the cost of doing business because in most cases, you will earn far more through farming than just outright holding a crypto, but there are occasions where you may have that impermanent loss. Here's a chart showing the impermanent loss percentage relative to the change in price. In a nutshell, you're putting multiple cryptos into a liquidity pool and taking on the risk of impermanent loss. However, this is in exchange for the right to a certain percentage of all fees generated by the pool, aka crypto passive income. Now let's move on. Next is the win page. Here you can bet on the short-term price movement of BNB to win multiples of whatever you bet. The lottery page is where you can buy tickets for $5 and hope that you win the pot. I don't really dabble here. And lastly, we have the PancakeSwap NFT market.
1 week later.
$15,000 total into 5 different farms, and here are the results after 7 days. As you can see, not so good. I provided liquidity for 5 different pairs, BUSD, Cake, USDT, MBOX, and ADA, all of which were paired with BNB. And in the 7 days that I was running this experiment, every single coin was down a significant percentage. But don't worry, I've done the math so we can see the full breakdown of what I earned from this and from where, because I did earn money. Timing my buy-ins couldn't have been much worse, but there were still rewards generated. And hey, that's investing, and it's my job to be transparent about the results. So even though the ending values are down, we did earn quite a bit of cake from the base farm rewards and money from LP rewards. If we take a look at the percentage change, we can see how much I'm down on each farm. That has nothing to do with farming. In fact, farming saved me money. It's important to compare my positions to the percent that I would be down if I just held the cryptos outright, not in a farm, not staking, just in a wallet somewhere. I lost less money on every single pool than I would have if I just held the cryptos. I've broken it down so we can see how much I made in fees and LP rewards generated. Looking at the totals, from pool fees and LP rewards, I made a total of $152 from farming off of my investment of $15,000 in 7 days, which is a whopping 1% return in 7 days, or 68% annualized. And this highlights the need for strategy in yield farming. I think yield farming is best with cryptos that you plan to hold long-term anyways. This is because you won't care if prices drop 10% like they did for me, because you're still earning more than you would have holding outright. So if you plan to hold long-term anyways, there really is only upside here. If you're looking for short-term gains, this is where you can be stuck in a tough place. So in a vacuum, it would have taken $34,500 to generate $50 every day in passive income from yield farming based on these numbers. Now, obviously, you need to take into account negative price fluctuation and changes in trading volume, which can affect your APY. Something else to consider is you can take on a safer strategy to yield farming and only farm pairs with a stablecoin. The consensus here seems to be that you can reliably make 15 to 20% APY in these pools, stablecoin pools, with much less volatility risk. So assuming a 20% return annually, it would take about $92,000 to maintain $50 per day in passive income. Now let's say 20% isn't good enough for you. You want the highest returns possible. Well, there's no set in stone best way to go about this. I wanted to take a look at a research paper by Nansen.ai looking at yield farming activity. And as you can see, 36% of all farmers who join a farm exit within the first first 5 days. And this makes sense because the juiciest rewards will come at the launch of a farm for the sake of attracting new farmers before yields decrease. So it seems based on this activity that the best strategy for the highest yield possible is to look for new farm opportunities, hop in, and then move on before rates start dropping or volatility really starts kicking in. To further illustrate this point, Nansen.ai pointed out that a whopping 42% of farmers who join on the first day of a pool leave within the first 24 hours. Now, of course, this is a higher risk strategy and much more work, and I'm not sure that we could call it passive income at this point, but that is the way to earn the highest yield possible here. So if you appreciate my efforts and transparency in this topic, please consider hitting the subscribe button. It's free and you can always change your mind later. And from here, I recommend you check out this video that highlights the best possible passive income that you can get by lending out your stable coins. It's much less work than yield farming. So I'd like to thank you so much for watching, and I hope you have a profitable day.